Hey everyone, welcome back to your weekly market outlook. This is for the 16th of December 2024. Let's go through very quickly. It has been a pretty busy week last week, and we are expecting a much busier week this week, especially this week. I think we're going to be looking at a drop in liquidity, and I think there's going to be an increased volatility just because we do have really huge market moving events this week. All right, let's take a look at last week. It was basically the start of a central bank bonanzas for December, starting with the RBA unchanged in terms of interest rate. Canada cuts by 50 basis points. Swiss National Bank also cuts by 50 basis points. The SNB cut was unexpected. That wasn't priced in by the market. We saw that market was expecting only a 25 basis points cut. We got a 50 basis points cut. The ECB, as per consensus, we did get our 25 basis points cut. And in terms of any information for further rate cuts, they're sticking by with their incoming data to affect their decisions in terms of making interest rate decisions. All right. Other than that, the CPI numbers and the PPI numbers from the US comes in strong. But it is pretty much as per expected, with the consensus expecting CPI, the annualized CPI, to go up to 2.6 to 2.7%. We got that. Core CPI monthly growth remains at 0.3%. The PPI, in terms of the monthly change, we do see that huge gain there. Previous number was actually revised up from 0.2 to 0.3. Market was expecting a 0.2% on the PPI. We got 0.4%. So there we go. All the data right now at this point in time still points to a strong US economy, which is probably going to influence what the FOMC is going to say this week. All right. Jumping on this week, we have the flash manufacturing PMI numbers coming out from the Eurozone, the UK, as well as the US. I don't think this is actually going to be market moving events. The US retail sales number on Tuesday, that's going to be market moving events. And then on Wednesday, we're going to be expecting the UK inflation number. UK inflation number is expected to go up from 2.3% to 2.6%. And then on Wednesday, we are also expecting the FOMC interest rate decision. We are right now looking at a 25 basis points cut. The CME Fed Watch tool is now pointing to a 99.6% chance of that 25 basis points cut. So I think for this week, wouldn't be any surprise there that the FOMC is going to cut by 25 basis points. What's really interesting is obviously the statement and the economic projections, because now with a lot of traders expecting the cut to happen in December, we're not really expecting further cuts in the next 3 months. I think the FOMC is going to go into a wait and see situation there in terms of how the inflation is going to play out. I think they're going to cut and then they're going to pause for at least about 3 months. And we want to see if that is actually reflected on the FOMC economic projections from the Fed dot plot. All right, see if we are getting at least 3 rate cuts in 2025, or we might get less rate cuts in 2025. I think market, it's expecting about 3 rate cuts in 2025 at this point in time. All right, that's from the US. And then on Thursday, Bank of Japan interest rate decision. This is going to be a huge market moving event. Market has been tiptoeing around the Bank of Japan here in terms of what the expectation for that hike, whether or not we're going to get that hike in December. News has been coming back and forth that Bank of Japan is going to do it. No, Bank of Japan is actually going to push it back to 2025. So this one here, there's a lot of unknown for the Bank of Japan interest rate decision. And then that's typically in the morning in Asia. And then for the UK, we're expecting the interest rate decision as well. And also this time around, we're not expecting a cut from the Bank of England. However, there has been talks in the market that the Bank of England might go for that rate cut. So the probability is there. There is a little bit of a heightened probability for a potential rate cut from the Bank of England as well. But at this point in time, the consensus the consensus is for the Bank of England to not adjust interest rate at this point in time. All right, so that's pretty much it in terms of the key numbers to watch out for. I know the holidays are coming up next week, so I think there's a huge volatility this week, considering that we should be looking at a decreased liquidity in the market starting from this week. Okay. All right, let's take a look at the Aussie USD, and a couple of things to talk about for the Aussie USD. The Aussie USD is in a clear downtrend. We have a new resistance trend line to watch out for. We also have 64 cents that has been tested last week as a resistance, and market has failed to overcome 64 cents. The momentum still points to the downside. We have pivot just slightly below the 64 cents. So right now we're looking at 64 cents as the major resistance for the Aussie USD. In terms of how far we're expecting the drop for the Aussie USD, I think the drop would actually be limited to about 63 cents for the Aussie USD. So this one here is stable. We're not expecting crazy movement for the Aussie USD. The Euro USD, on the other hand, this here is actually going to be really choppy. We have that bearish order block. That bearish order block has been confirmed by the rejection of 1.06. What we were looking at last week was whether or not market is able to close below 1.05. It did close below 1.05, got rejected below 1.05 twice, but as you can see on Monday, price is now back up a little bit. So this is right now inside that 1.05, 1.0550. So on Monday, it's crucial to see if there's actually a rejection from this area here. If we move back down below 1.05, then I think the trend is pretty much set for the Euro USD for this one here to test lower numbers around 1.04 and 1.0350. But on the condition that price move back down below 1.05. If price stays inside that 1.05, 1.0550, then we expect a lot more choppy trading for the Euro USD this week. All right. Pound USD. Pound USD right now, it's being supported at 61.8%. This is where market took a breather last week, basically closed at 61.8%. To put it simply, we have broken below 1.27 on the Pound USD. The momentum has shifted, but we are now finding a little bit of support at 61.8%. Major support wouldn't come in until 78.6%, which is at 1.2550. And considering that we are trading below the pivot level at this point in time at 1.2670, we expect price to not be able to push beyond 1.27. If price is able to push beyond 1.27, then we expect more choppy trading for Pound USD. If price comes back to pivot today, not able to surpass 1.27, we're likely going to find more sellers into the market. But again, key driver for this week would be the Bank of England and also how the FOMC is going to stand. If the FOMC cuts by 25 basis points and then specifically states that they are not really in a rush to cut interest rate, that could strengthen the US dollar, that could push the sterling down. Now, if the Bank of England also surprised the market by cutting 25 basis points, that would actually send sterling spiraling down really quickly. We're not even looking at a move to 1.25. We might actually see a further drop closer to 1.24, 1.2350. So right now, situation depends on whether or not the Pound USD is able to surpass 1.27 or will it break below 1.2550. That would be the situation for the sterling here. All right, lastly, we have the dollar yen. Again, dollar yen, this is currently moving up higher. In terms of resistance, we have been projecting resistance at 154.50, 155. We're now expecting this level to be reached this week, and you can also see where the resistance 1 on the weekly pivot is currently located. It is located at 155. So yeah, we do expect price to reach 155 at least before the Bank of Japan interest rate decision. If Bank of Japan does decide to hike interest rate, just a little bit of a fair warning, it might send the dollar yen spiraling down. It will strengthen the yen significantly because right now at this point in time, market is expecting Bank of Japan to act on it, but not really that confident that they could actually enact that interest rate hike this month. But if they do hike interest rates, then I would expect oil price to fail. Even if price reaches 155 from a technical perspective, that fundamental key driver would actually send the dollar yen down. In terms of how far down, we are talking about 3-4 yen's movement at least once that interest rate hike is announced. If there are no interest rate hikes, then we do expect 155 to be broken. We expect the dollar yen to be back up around 157 and 158 following the announcement there. All right, so with that, good luck with your trades for this week. And if you are away for your holidays, happy holidays.